traders, Raghee here, and in this update we're going to go through the differing zones for a pullback entry in the context of an overall uptrend that we're seeing in the indices. So we'll outline those zones, talk about the indicators that I am using to identify them, and then determine what could be perhaps a catalyst for that pullback. Well, let's start with the end first, which is what could be a catalyst for the pullback. And gosh, look no further than the economic calendar this week, as we have just a slew of FOMC speakers from today's Barkin Bostic Daily to tomorrow's Williams at 9:10 a.m. Then we've got Bowman Daily, Waller Evans. I mean, it's just a constant barrage. So any one of these events could give us the kind of volatility that could trigger a pullback. So let's presume that one of those events could be the reason, could be the trigger. Now, where do we want this pullback to go to? Well, let's start with the Dow. Double green, JT multi-trend. And then we have 5 propulsion dots, 21. This is the 21 propulsion, which actually this moving average, or if you have a 21 moving average, that indicator is going to mimic where the 21 EMA is. But notice it turns on and off to let you know when there's a higher probability of the 21 holding. Moving out to the S&P. S&P has actually both the 13, that's the yellow, and the 21, there's your green, in play. So your 13 could be a shallow, very aggressive pullback entry. I usually shy away from the 13, but I will tell you, we've had candle after candle respect this area. So I would say you could put a small amount of skin in the game at that 13, but I usually prefer to start the aggressive conversation at the 21. And, you know, of course, then we have the entirety of the wave in play. So we can keep that in mind as well. But the 13 EMA might be a really good place to put on either micro ES or even calls in the SPY. All right, moving on then to the NASDAQ. The NASDAQ's the one that it's actually pretty easy to say, look, we've got 2 levels that are really interesting. We've got this Darvis support here, and we have the 21 EMA by way of the 21 propulsion, really at the same area. And that would be a terrific pullback buy level. So I love the fact that we have 2 tools stacked up in this area. That would be where I'd focus on a pullback in the NASDAQ. And then finally, the Russell. Small caps have broken out, clearly. They've been in an uptrend since the 3rd of November. And the 13 is in play. So here's your 13 EMA. Here's a Darvis level support. So I'd combine these two for a nice, very aggressive, very aggro buy zone. And then we've got 5 propulsion dots here. That's where your 21 pullback is going to happen. I consider that aggressive as well. Now, why do I call something aggressive? It just simply means I don't want to put a lot of size on. I might prefer to go with the micro. I might prefer to go with IWM calls in lieu of the RTY mini. I'll think about the mini as we get closer to the 21 propulsion, or if we even get into the wave. That's where I'll be playing more size, and likely the minis as opposed to the micros and the calls and the aggro area. So that's what's going on with the indices. That's what I'm looking at for pullbacks. And then we have the catalyst throughout the week for potentially a move to the downside to buy. This is good old-fashioned buy the dip, right? Buy the dip, look for those support levels. And I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.